It is June 26, 2008. A man sits at a kitchen table in San Francisco. He is 26 years old. He has not paid his rent in 2 months. He is reading an email he just sent. The email asks for $150,000. In return, he is offering 10% of his company. The company has 3 employees. 2 of them sleep on air mattresses on the floor of the apartment he is sitting in. He hits send, then he waits. What he does not know yet is that he will hit send 7 times. 7 different investors, 7 different rejections, and every one of those 7 on this single week in 2008 will walk away from a stake that today would be worth $8.45 billion. The man is Brian Chesky. The company is called Airbed and Breakfast. It rents out air mattresses on strangers' living room floors. To investors in 2008, this sounds like a joke. To Brian, it is the only thing he has left. He has $40,000 in credit card debt. He has a co-founder named Joe Gebbia who is sleeping in the next room. He has a third co-founder, Nathan Blakarczyk, who has just rebuilt the entire website from scratch. They have been turned down by nearly every venture capital firm in Silicon Valley. They have tried selling cereal. Yes, actual cereal. They printed boxes called Obama O's and Cap McCain's and shipped them to political conventions. That is how they paid the rent for 6 months. By June of 2008, they are out of cereal money. They need real funding. So a young founder named Michael Seibel makes 7 introductions. 7 warm intros to 7 of the best-known early-stage investors in the world. The terms are simple: $150,000, 10% of the company, post-money valuation of $1.5 million. On June 26th, Brian sends the same pitch email 7 times. Same offer, same terms, same room, same air mattresses on the floor. He has done the math. If even one of the 7 says yes, the company survives. If 2 say yes, the company eats. If 3 say yes, they hire. He hits send, then he waits. The first reply comes back inside a day. It is polite. It is short. It says the market is too small. It says the team is impressive, but the idea is not. Partner has done the math too. He has decided that $1.5 million is too much money for a company that rents air mattresses. The second reply comes back the next morning. Same tone, different language. The team is great. The market opportunity is unclear. The investor is not convinced strangers will sleep in other strangers' homes. He is wrong, but he does not know that yet. Nobody does. The third reply is even kinder. It is full of admiration. It is also a no. The investor says he likes the founders but cannot get comfortable with the model. He hopes they keep in touch. They will not. The fourth reply does not come back. Not a no, not a yes, just silence. The fifth reply does not come back either. Same silence, same room, same kitchen table. Brian sits with 2 open threads in his inbox and watches them stay closed for 3 days, then a week, then a month. By July, 5 of the 7 have written back to politely say no. 2 of them never reply at all. Brian Chesky later publishes the rejection emails on Medium. He titles the post 7 Rejections. One of the 7 names will eventually become public: Fred Wilson of Union Square Ventures. In 2011, 3 years later, Wilson will write his own blog post about it. He will call the decision to pass on Airbnb the biggest mistake of his career. Not a mistake, the biggest one. Wilson is one of the most thoughtful investors in the entire industry. His firm is famous for getting the next thing right. And on this 1 week in 2008, on a 10% stake in a company that rented air mattresses, they got it wrong. The other 6 have never publicly said which firms they were. Brian redacts the names every time he tells the story. He is generous in a way that is a little unsettling. He is not trying to embarrass them. He is trying to explain something. A few months later, after all 7 have said no or said nothing, the founders apply to a small accelerator called Y Combinator. Program is run by a programmer named Paul Graham. Graham reads the application. He almost rejects it too. He thinks the idea sounds insane. The interview saves them. By the end of the meeting, Y Combinator offers the founders $20,000 for 6% of the company. The 7 who said no were offered 10% for $150,000. The one who said yes paid less to get less. 18 years later, that 6% is worth approximately $5 billion. Today, in May of 2026, Airbnb is a publicly traded company. It is worth approximately $84.53 billion. The math from there is simple and brutal. A 10% stake in Airbnb today is worth approximately $8.45 billion. The investors were offered that stake for $150,000. The return on that $150,000, if a single one of them had said yes, would have been roughly 56,000 times the original check. 56,000 times, not 56,000. Each of the 7 investors on that single week in June walked away from $8.45 billion in potential return for $150,000 in risk. Multiply that across all 7. The combined opportunity cost, if every one of them could have written the same check, is north of $59 billion in compounded value, missed in a single inbox. The lesson is not that the 7 were stupid, they were not stupid. They were among the smartest, most pattern-trained capital allocators in the world. The lesson is something quieter than that. Pattern recognition, the thing that makes a great investor great in 99 cases out of 100, is also the thing that makes them blind in the 100th. The 7 looked at Airbnb and saw an air mattress. Brian looked at Airbnb and saw a hotel chain that did not need to own any hotels. They were looking at the same company. They were not looking at the same future. The most expensive sentence in venture capital is not, "We don't think this will work." It is, "We don't think this is big enough." The 7 did not say no because they thought Airbnb would fail. They said no because they thought the ceiling was low. The ceiling was the entire global lodging industry. They could not see it because the company was small enough to fit on a kitchen table. There will be another Airbnb, there always is. It is sitting in a kitchen in San Francisco right now, or in Bangalore, or in Lagos, or in Sao Paulo. It is being pitched to 7 investors. 5 of them will write back politely. 2 of them will not write back at all. 1 of them, 18 years from now, will write a blog post about it. The post will start the same way every one of these posts starts. A man sits at a kitchen table. He has not paid his rent in 2 months.